Each individual is taxed in accordance with what's known as the income tax bands. So we have the basic rate band, the higher rate band, the additional rate band, and of course there's a special zero starting rate band which applies just to savings income. Each individual, regardless of age, is entitled to a personal allowance, potentially a personal savings allowance, a dividend allowance, a blind person's allowance, married couples allowance, and even possibly a marriage allowance. The personal allowance tends to increase each tax year, so at the start of April every year, and for the 2019-20 tax year it's set at £12,500. The personal allowance is deducted from net income to save tax at the highest rate. For those individuals who pay tax under pay as you earn, they would see the benefit of this throughout the tax year. For self-employed individuals, they would see the benefit of this via their self-assessment return. There are, however, special rules that apply with regards to the personal allowance. For example, if your total income exceeds £100,000, otherwise referred to as the adjusted net income figure, the personal allowance is cut back by £1 for every £2 over this amount. For the purposes of calculating the £100,000, you need to take account of all income. So that could be salary, dividends, interest income, income from rental properties, as well as full bond chargeable event gains. There are, however, a few planning opportunities which can be undertaken in order to retain your personal allowance. So where, for example, your total income does exceed £100,000, it is common for a lot of people to undertake some planning to bring their income below this threshold to retain their personal allowance. The most common of these is usually by making gross pension contributions or gross gift aid contributions. The personal savings allowance applies strictly to interest income only. So the most common of this would be bank account interest or interest from unit trusts or interest from OICs, as well as chargeable event gains on life assurance policies. The personal savings allowance is £1,000 for basic rate taxpayers, and it is £500 for those who pay tax at the higher rate. Additional rate taxpayers, however, do not benefit from a personal savings allowance. It is also important to bear in mind that the personal savings allowance, when you're looking at the order of taxation, applies after the zero rate savings band, if applicable to that particular individual. Each individual, regardless of the rate of tax they pay, is entitled to a dividend allowance of £2,000. Dividends in excess of £2,000 will be taxed in accordance with the individual's other rates of tax. So, for example, if the individual is a basic rate taxpayer, they would pay tax at 7.5% on their dividend income in excess of the £2,000 allowance. Higher rate taxpayers will pay tax at 32.5%, and additional rate taxpayers will pay tax at 38.1%. The married couples allowance is available to those who are living together and married through either the whole or part of the tax year where one spouse was born before the 6th of April 1935. For the 1920 tax year, the maximum married couples allowance available is set at £8,915 and the minimum available is £3,450. However, it is reduced where income exceeds £29,600 and it is cut back on a £1 for every £2 in excess of this amount. The way in which the married couples allowance applies is it's a 10% reduction of either that maximum minimum amount or the figure that you've calculated, dependent on the other income that the individual has, and essentially it reduces the tax bill by up to 10% of that amount. So, for example, for the 1920 tax year, the minimum amount would be £345. The marriage allowance enables you to transfer up to 10% of your personal allowance to your spouse or civil partner. Both of you, however, have to be either paying no tax or basic rate tax for the marriage allowance to apply. So essentially, if you had somebody who had income below the personal allowance figure of $12,500, so they were not maximising the use of their personal allowance, they could essentially opt to transfer up to 10% to their spouse or civil partner, thereby saving their spouse or civil partner some tax. The only caveat with this one is that you cannot benefit from the marriage allowance if you are already claiming the married couple's allowance. In order to claim the allowance, the process is quite straightforward. You can just apply online through HMRC's site. I hope that's been useful, but there's a lot more information available on TechLink.